Before I start the video fully, I just want to go over the QQQ and the SPY in terms of more of the negative narrative, because potentially in this video I covered a little bit more on the bullish side as opposed to the negative side, even though I did cover both sides for the most part. But in terms of the negative side, if this downward trend resistance line for QQQ, which is an ETF for NASDAQ, were to hypothetically hold true and this was a false positive, then we would, I think, for example, tomorrow, it would be almost like slightly down / consolidate, and then on Monday drop down to levels of like $436. Right now we're at $445. But that's for the QQQ. Again, I cover more of the bullish side in the video so you can see that bullish side. But in terms of the negative side for SPY, which is kind of holding more closer to downward trend resistance line, we would come back down hypothetically to 511, 512, 513, $14. But again, I think the same thing would hold true. Friday would be pretty much like going around this range, don't really do much, but then by Monday drop down to like 512, 511, 513, 514, stuff like that. But for the most part, I indicate as to why it might be slightly bullish for the short term within the video. So hopefully you guys enjoy the video. Hi everyone, hope you guys are all having a great day today. In today's video, I'm going to be covering the whole entire market in terms of the S&P 500, the Dow Jones, NASDAQ, SPY, QQQ, which is ETFs of, for example, SPY, S&P 500, QQQ for the NASDAQ. I'm going to go over the 10-year treasury, interest rates, so on and so forth. And yeah, hope you guys like the video. Hope you guys enjoy it. So in terms of just quick numbers, I guess, for the most part, the 10-year treasury is at 4.587%. So it's still rising. And in terms of interest rates, personally, I think they're going to probably end up doing one, actually, because it looks like they might get forced to it. Initially, I said either 1 or 0. I still don't think they're going to do 2, but the European Central Bank gives strong signal that cuts are on the way despite Fed uncertainty. Not necessarily, for example, the Fed will follow the European side, but with them doing it, plus inflation for the PPI, it was kind of lower than expected, so on and so forth. I think they might essentially get pressure to do at least one, because predominantly beforehand for this year, everybody was kind of, in terms of the market, was expecting a few rate cuts, not just 1 or 0, right? So to satisfy hypothetically the market, I think they're essentially going to end up doing one. So the European Central Bank on Thursday held interest rates steady for the 5th straight meeting, but gave it strong indication yet that rate cuts could be ahead. So it's could, it doesn't necessarily mean for sure. In a statement, the institution said it would be appropriate to reduce the current level of monetary policy restriction if inflation continues to move towards 2% target. At the same time, in terms of the US side, it's moving towards 2%, but it's sometimes pretty much just like staying flat or slightly rising. We are not assuming that what happens in the Euro area will be the mirror of what happens in the United States. Following speculation about the impact of the hot U.S. inflation print of the Federal Reserve policy. So one other thing too, in terms of the CPI numbers and all stuff, for example, gas prices, like energy costs were going up, housing and car insurance. The thing is though, especially energy cost, that drives up quite a bit of inflation in my opinion, just because transportation comes into effect, which naturally gets put into the price of the consumer goods and so on and so forth. And also building houses too, right? So then if you can't really build houses for a good price, because energy cost does play a role in terms of materials and transportation transportation of the materials, then what will happen will be less supply, and if less supply comes into the housing market, and with higher demand, cost goes up, so on and so forth. And if you've seen in terms of housing market, it's really never really come down fully. Like there'll be times it'll come down like a few percentage points and all that stuff, but it's never back to the same levels for example, pre-pandemic or all the years before, and et cetera, et cetera. Like it's constantly going up, it seems like, for the most part. So that does play a role, just because if housing costs does go up too, then buying power for everybody else does go down. So technically, hypothetically, it does bring down inflation a little bit if that's the case in terms of buying other consumer goods. But with energy prices going up too, those costs can't really come down to a certain extent, right? Until the energy plays a big role, personally, in my opinion. But yeah, and like always, this is just my opinion. I'm not a professional, so please do your own due diligence and research before buying and selling. Now, in terms of today's economic news, before I get into analysis part of the S&P 500, Dow Jones and NASDAQ, and SPY and QQQ, I'm gonna go over the economic news. So initial jobs claims was previously 222,000. expected at 217,000, ended up getting 211,000, so that's good, showing a strong economy. But at the same time, it goes against the Federal Reserve trying to lower interest rate. So that way, because if they see a strong economy, then they're technically thinking it's not slowing down in terms of inflation. Producer Price Index, so PPI, previously 0.6. It was expecting 0.3, got 0.2%, so lower than expected side, so that's good. Core PPI, 0.3 previously, 0.2 expected. And then this one's not showing it, but it was 0.2 as well, so flat and as expected. Then PPI year over year, 1.6 previously and got 2.1. And then core PPI year over year was 2.7 previously and got 2.8, so higher than before as well. And same as the PPI year over year. Then for tomorrow, April 12th, import price index, it's previously 0.3, expecting 0.3 as well. Import price index minus fuel, 0.2 previously. We'll see what we get. And then consumer sentiment. So those are both at 8:30 a.m. before the trading bell at 9:30. Then at 10 a.m. we got consumer sentiment preliminary, 79.4%, expecting 79.9%. And then at 2:30 p.m. we have Atlanta Fed President Raphael Bostic speaks. Again, sorry for the name. And then 3:30 p.m. San Francisco Fed President Mary Daly speaks. And then in terms of now looking at the overall market, what really carried the market today is, besides the fact that the PPI number was better than expected, so lower than expected, was the tech sector. So if you look at Apple stock, it's just a huge spike up, and it was a 4.33% jump today, just straight green all the way through. So if you played some option plays and all that stuff, you would have done really well today. Market cap for the company is $2.7 trillion, so that 4.33% is nothing to technically laugh about in terms of carrying the market. And then if you look at NVIDIA too, which is also a it's up there, $2.27 trillion company market cap, and it jumped up 4.11%. So huge movement to upside. Tech sector definitely carried the markets today with a combination of lower than expected inflation numbers for the PPI. And then what happened, or actually, for example, the overall, let me see, in terms of the market movement, I would say short term, it looks like it's going to be still going up because the VIX is going to lower territory, which is lower volatility overall, indication of higher or low volatility. So given the low volatility, given the short term in terms of indications from the graphs, it looks like short term wise, we could potentially be going up, even though for the long term, for example, so here's the Dow Jones. The long term, it shows that we're in bearish territory for the Dow Jones. Now for the S&P 500, not quite yet for the 5-year, but for NASDAQ we are, but I'm going to go over those as well. And if you look at the 1-year chart, still in bearish territory. And for example, within these channels, resistance levels coming down and been going down for quite a few days. Now again, for the Dow Jones, it's not as much companies into it as much as the S&P 500. So looking at the S&P 500 / SPY, I'm just going to go over the SPY, just like before, which is an ETF, by the way, for the S&P 500. The channel's dating back since 2010, hitting resistance, coming down. We do have room to grow to the upside, but if you look at the 5-year chart, it doesn't necessarily mean that it's going to cross over to bearish territory, but it's arching down to potentially get into the bearish territory. And at the moment, we're in bullish territory still. But then if you look at the 1-year chart, it's in bearish territory, right? Hypothetically, it could go up to bullish and cross over. But in terms of long term, I think we potentially could be having a dip. Now, the thing is, though, if you go into the 1-year chart, 1-month chart, it looks like we were coming down to the, for example, $509 price point. Again, right now we're at 518. But with the today's spike, you would assume we could break through, for example, this downward trend resistance line right about here. It's not really the cleanest line, but either way. The only thing is, though, looking at the SPY, I would say potentially not break through it. But then if you look at the QQQ, which is the tech sector, which kind of carried us, it already broke through it. And I'm going to show that. So if you look at the 1 month, let me see. So technically it's arching, but I wouldn't really take that as an indication. And if you look at 3 month, it's also arching, right? So potentially you would assume maybe it might either still go up because in 6 month it's still bullish and doesn't look like slowing down. But then if you look at the VIX, which I'll show the QQQ after soon, but the VIX is going lower, right? So the 1 month going lower, maybe potentially crossing. 3 month going lower, right? It's just dropping down. And then let me see the 6 month still going lower. So I think volatility will slow down. If volatility slows down, technically the stocks will kind of go up because there's less volatility. And then if you look at QQQ, again, same thing, 5-year chart. There was only one time during like the pandemic, like massive spikes with tech stocks and all that stuff. But for the most part, we've been within the channel since 2010 as well for the NASDAQ/QQQ. And then we were somewhat arching down when we might still be going up because, again, like I told you, the VIX is kind of low and all stuff, but especially this part. So let me go over the 5-year and 1-year first. So the 5-year showing that we crossed over to the bearish territory, but we still have a green candle. So we might be going back to bullish potentially. And then the 1-year is in bearish territory, but it's trying to arch to a positive. But at the same time, you've seen here, it's tried to cross over to a positive being bullish, but it still went down. But the reason why I'm thinking combination with the VIX and all stuff in terms of QQQ is if you look at the trend line right about here, it's pretty amateur kind of line, but either way you get the point. Even if I drew it up here, it crossed any resistance line, hypothetically, whatever clean you might draw, and it passed it. So with a combination of it passing that resistance line, it could be a false positive, right? But with this and the VIX, I think short term, we might still be going up potentially. And given that, for example, the European side, they're indicating a strong chance of a price interest rate cut. And then the US side, I think, just to satisfy the markets, I think later on they might do it. So I don't see any real slowdowns in the near future. Anything could happen, so on and so forth. But for now, it seems like it's decent to the upside. Again, I'm not a professional. This is all just my opinion. So please do your own due diligence and research before buying and selling. But this is all the information I have for today right now. If you have any questions, feel free to ask. I'll try to answer them as soon as possible. But for now, see you guys in the next video. Take care. Peace.